All right, so good day. Yes, so today we are talking about structure. Today we are looking at market structure, how to go about the market analysis, how do you understand the movement of the market for you to be able to select anything in the market. How do you get to know where market is headed so that you can be able to make a very good analysis and be able to understand where market is going to. Mind you, structure is different from directional bias. When you understand your market structure, you understand where to get an entry from or where to do anything from, so that you don't just go and start fighting how to find buys from a market that is ready to what to sell. So now let's get into it. So now, first thing first, we have our basic market structure, which is what we've been looking at. Now, like I said, market structure is in simple term the movement of the market, the direction of the market. Where is the market headed to? Now, when you understand where the market is headed to, then that is when you're able to what you're able to understand that yes, this is where we are going, and this is what I'm supposed to do. I'm supposed to look for sales. I'm supposed to look for buys. I'm supposed to stay out totally. So now, under our market structure, like I said, we have different types of structures, and there are different ways to be able to identify them so that you can be able to know the best movement or the best way to be able to read your market. So now let's get started. Now, first thing first, under our basic market structure, now we have to understand that okay, our market consists of highs and lows. Our market consists of highs and lows. So for you to be able to understand that okay, oh, this market is headed to this particular side or is headed down to is trying to buy, is trying to go up, is trying to come down, you have to understand that okay, what is it currently entailing currently. Are you seeing series of highs or series of like new lows being formed or series of new highs being formed? So now that is what you're going to use to be able to know where you're headed to. So now let's get started. Now, first thing first, let's talk about market movement. Now, how is it, like how does it move? Now we have, let's say for example, okay, this is the first structure I want to talk about. Now under our basic market structure, this is how market is always basically as. So you can see here we have a market that is basically moving up. So inside here, all what we can see is what is highs and lows, highs and lows. Market is just forming series of highs and lows, in the sense that okay, well, this market has just been what it has been going up. I know if you take a look at this, you can see that okay, we've been going up. It started from here and it's already here. So everything that we've been doing is just up, 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 up. So and it's been forming series of highs and lows, taking it up too. And then the same thing too happens when we also want to go on a downtrend. Okay, let's say our market wants to go down, so we want to also come down. Can you see? You can see how it's coming down. So now this is also an a clear market structure. Now you can see that okay, fine, this market right here, everything that it's been doing is just creating also highs and lows. But then here we are seeing the market trending down. All it's doing is what is coming down. Now, this now brings us to this particular uh form of basic market structure. Now, first thing now, what are we talking about? Now we're talking about a trending market. Now, first thing first, you have to understand that a trending market is a market that it has already shown a specific movement or direction. Now, definitely in this particular kind of market, you can already see that okay, this market is going up, this market is going down. The movement is specific, just like this. Now, when you look, I can see that okay, from we started from here and then we've gone all the way to here. And reaching here, I can see that this market is going down. So we already have a pure and complete downtrend. So now when you actually see something like you understand that okay, yes, this market is trending, and the only thing I'm to look for here is okay, sells to continue the downtrend or buys to continue the uptrend. So a trending market is the first thing that we look at. But because why? Because once our market is on a particular trend, you have to make sure that we follow that certain trend, and following that certain trend makes us to what to be in line with whatever market wants to do. It's not as if you see a market that is trending and going down, you now go and start looking for how to be able to force buys, how to force buys inside the market that is trending down and selling. It doesn't work that way. All you need to do is look for sales. Because for example, okay, I caught a first sell from here. I took this one, fine. After taking this one, now I see that okay, market will continue to sell. I came again, cut this one, so and then I took that one. Now that is how you continue. Because why? Because you've already seen that this market is going down. So all you need to do is just be finding more sales and continue to go. The same thing for a buy market. You also just need to like look for how to also join the market and what and be buying. So you don't go to a market that is trending sales and then you start looking for one long term buy. When you know that okay, this market is selling, the only thing you can do here is to okay try to look for corrective moves or impulse moves, which is also under market structure. But we'll talk about that. So now let's now get fresh into it again. Now back to this same trending market. Now under remember this is basics. Now to take it deep a bit. Now under a trending market, now you must also understand that this market is made up of what we call highs and lows. What I said highs and what and lows. Now your market structure must always consist of what of your highs and your lows. Now meaning that in every market you must have at least a higher high and a higher what and a higher low. Now, for example, let's say, okay, fine, this market is going up now. Now, let's say we want to go up now, we have a lower low right here. This is our first low. Now, immediately you've seen our first low right here. Now, this market will come and create a lower high. Now, can you see? Now, so long as this one is not taken out yet, our uptrend is still complete. It creates a lower high. Now, of course, another lower high again right here. Are you getting it? Now, next thing, we can say that okay, another lower high has been created. This is our main low. This is our main low that started this entire movement. And now inside this particular guy right now, next thing we have another one. We have it now. It keeps what it keeps creating and creating all this lower low, lower high, like lower high, lower high, lower high. It just continues to continue to create them. And then on this other side too, we'll continue to have a higher low, higher high. Then another higher high is created here. Another higher high will also be created here. Then another higher high too will also be created in this zone. Now, all these movements is just to tell you that okay, this particular market is what is going up. So for the fact that this thing for the fact that it's going up, you have to understand that all what you need to do in this particular kind of time is look for how to buy and continue with the market trend. So you don't just come here and start looking for what and start looking for how to sell. No, just continue to buy and follow up the trend. Because why? Because you can start your buy from here and then you can aim this last high that is there. And once you aim this last high, that does not mean that you cannot see more buys. You can catch all these ones too and join the buys and continue to go. The market doesn't just go, most times they tell you that in basic to say the market will go like this. It will just go straight, bam. No, it doesn't go like that. Inside all these places, inside these streets, there are tiny movements like this. All these ones here, I won't make up this movement. So, but once you're able to catch all these ones, you will still be able to make more money by the time you get to your final destination. Now, still under our market structure, now we have our next one we're looking at now. Now we have a ranging market. Now you see this ranging market here. Ranging markets don't have a clear direction. Now ranging markets don't have a clear direction. Now we are still under our basic market structure. Now we are looking at the types of them. Now you see this ranging market does not have a direction. Now a ranging market can be like this. It can just be like this. Now we have this. Now lows and highs. There's no breakout of anything. It's all here. Now this is what is happening. Now this market is just what is ranging on this same particular place. So now what we are looking for is now we are looking for how we can have one take out this high. That's okay by doing this, or we see this place being taken out. So now, but at this particular point in time, when you see that a market is ranging like this, now all you need to do is at this point is just relax and wait to see a certain breakout. Now, once you see a breakout on this market, probably okay, eventually I saw that okay, we took out this place, and then all I just need to do is wait for a retest, and then I'll continue to go up because we've already broken and we are all ready to go because the market has been ranging before, but then it has finally gotten out of its entire range. Then now you see when we talk about consolidation. Now Consolidation in the market, most times people mistake it, and then they'll say that okay, yes, consolidation is the same thing as a ranging market. But then, when you want to see a consolidation, yeah, now consolidation only happens after a very strong value long move has happened, or maybe a very long sell happened, or a very long buy happened. So for us to enter into the next move, market doesn't just take off just like that. Now let's say, for example, we started our buys from here. We've been buying. Don't mind my drawing. We've been buying. So market now go now. Let's say market now wants to come down. So market now started something like this. It's just consolidating, consolidating, consolidating. Then, but all this now eventually it breaks out. Immediately it breaks out. Maybe it probably comes back, and then there we go. Then before you know, the move now starts. It starts to what? Starts to come down. Starts to come down. Now, most times you can call this a range, yeah, but in real sense, it's not actually a range because why? Because this was just market consolidating to be able to grab enough liquidity, or get enough SLs as possible, so that it to be able to have enough power to be able to push down by the time we are ready to what we are ready to go down. So because once market is ready to what is ready to go down, now market needs all of this, like all the SLs that has this thing taken before. Now that is what it will now use to start its entire movement. So because why? Because all those things are money that will be needed to be able to fuel the market later on. Because why? Because without it, we are not going to. It's not. There might really not be enough energy and enough push for the market to fall down. But by the time all this consolidation is all done, then fine, you see it. There's a breakout, and we start to push down. But the consolidation is always after a very strong move has actually happened. Then that is when we see that okay, fine, market is ready to push. It's most times for a reversal. Let's see a reversal, and then that is when we get it. So now on to the next one. Now the next thing we are looking at down here is where we're talking about breakouts. Now, breakouts in the market is something that you have to pay very, very good attention to. Because why? Because when markets want to take a new move. Now, for example, it's always ready to what? Ready to take out that particular push, and then go up from there. So because why? Because if you are on a particular kind of trade where market has been consolidating or ranging for a while, so the next thing that you watch out for is a breakout. And then once you get a breakout, I always teach my own breakout that, okay, every breakout must come with a retest. So after the breakout, you see the retest, and from once you get the retest, you move in from there, and take your trades. That's the next thing. So, for example, let's say, okay, this market has been like this. Let's say we're just on range, range. We've been ranging. Now, by the time we take out this low that has not been taken out since, which was causing all this range, now there's already a breakout. So, what I now wait for is a retest back at least into this place. So, once that retest is done, I want to now continue my sell and go down. So, and also the opposite if it breaks above. And then the next one right there is where we talk about our reversals. Now, you see, reversal is when market is actually ready to what? Ready to change direction. But before I talk about that, now let me give you one very key thing about breakouts. Now, breakouts most times, make sure it happens where there's already an established support. Like for example, now apart from the other one for ranging, now let's say market, this was where we were buying from here. We've been buying and buying and buying. Then market now started selling down. Then all of a sudden took out this our main lower low here. It took it out. Now, immediately took it out, then of course it signified that there is a new change of trend. So all what you now expect is market to probably retest back into here, and then you decide to go. That is what your basic market structure will tell you about. So now on the other one, reversals. Now, reversals is when market is ready to change direction. Now, let's say for example, we're buying. We've been buying, buying, buying. buying, and now market is ready to change, what is ready to change direction. So you might probably see it taking out this first lower higher low that is here. Now once it takes it out, it will retest and then gradually start to take all of them out. So what has happened here is there has been a reversal. Market has gone from this valid and strong uptrend that it was before, and then finally shifted to the lower side to start to sell. So once you're able to spot this via your basic market structure, so the next thing you need to do is look for entries to go on to the next move. Because why? Because there's a day reversal happening. So that particular move that we have before is no longer valid anymore. So that is that for basic market structure. Very, very simple. So those are just the basic things you need to understand. Because why? Because understanding the basic market structure will help you to understand some very good market dynamics, and that will give you a very good edge. So our next class will be on the advanced market structure. Some advanced things you need to take note of while understanding your market structure.